Asian markets. Nancy Pelosi might have left the region, but is geopolitics still a big overhang as far as sentiment is concerned?
Well, I don't think markets overreacted during her visit. In fact, market response, as I'm sure you're aware, was reasonably quite muted. Actually, equities, and particularly Taiwanese equities, ended up at the end of the week. So I think markets looked through the geopolitical noise that very evidently the Pelosi visit generated. I think they probably assumed and concluded that this visit had more to do with domestic politics in the United States, particularly in the run-up to the midterms in November, than any meaningful change to the one China policy and strategic ambiguity followed by the U.S. towards China and Taiwan.
You are right, because market flows are now pointing to what's happening over in the U.S. We had that big blowout in jobs data on Friday, giving a big boost to the dollar. I'm just wondering, in a strong dollar environment, that will continue to drive outflows from Asia. Which markets will be the most vulnerable?
Those which are most exposed, I suspect, to the volatilities of global trade, and that typically means North Asia. In Southeast Asia, there tends to be much more of a domestic focus, one growth driven by consumption and services. This lends them a degree of insulation from particularly the stronger dollar story, but it's very much one that's critical to North Asia. And I think we've seen some underperformance of the markets in that respect.